This is the Weekly Outlook. Thank you for joining us at XM.com. After a few turbulent weeks that rattled financial markets, this upcoming week might offer some reprieve with inflation data sets from the Eurozone and the United States on the agenda. I'm Cristina Marujos. With me today is our lead investment analyst, Rafi Boyadjian. Rafi, before we look at the data, though, let's talk about the banking crisis that, for now at least, seems to have been averted. Do you think the reassurances and measures announced by central banks to tackle this issue were enough to really calm the markets?
Well, we definitely appear to be having a bit of a calm down in the markets, although it is a very nervous calm. I don't think it's safe to say that we're out of the woods just yet, because of course, what we saw with the other banks, such as SVB and Signature Bank, their problems pretty much went undetected by regulators and of course the Federal Reserve as well. So who knows what else is kind of creeping under the surface, and we can't rule out more troubles getting into trouble, more banks getting into trouble in the United States, because there does seem to be a bit of a stress in the banking center within the mid-sized regional banks in America due to the nature of those specific types of banks. But at least we are seeing some risk appetite returning, although on the whole, the mood is fairly subdued. I think it's going to be difficult for a risk appetite to make a very strong comeback, because even if we don't see the banking crisis escalating further, there is now a different type of worry, and that is based on the fact that because of financial conditions having tightened on the back of this crisis, so that kind of is in a way like a rate hike, and then on top of that we see inflation taking time to calm down further, then that would mean more tightening, and against a backdrop of an even weaker economy, and so therefore we are seeing heightened recession risks.
Well, inflation seems to be the theme of the upcoming week, Rafi. Let's turn to the United States. Core PCE inflation, the Fed's preferred metric, is coming up. Could this release solidify another rate hike at the May meeting, and how could the dollar perform?
Well, I think, definitely the PCE inflation numbers will be important. Now, if we have a look at what happened with the CPI inflation figures, they were bang on in line with estimates, except for the month-on-month core CPI figure, which was a bit strong. More importantly, when we heard from Jay Powell at his press conference, he pretty much basically indicated that the Fed remains focused on services inflation. He said that although there's been progress on overall inflation coming down, there's been no progress in terms of services inflation coming down. So this puts the spotlight on the core PCE price index due next Friday, and particularly the components, the services components of that core PCE price index. And so even if, again, we see overall numbers, nothing too worrying there. If we see the components not moderating fast enough in terms of the services prices, then that would pretty much keep the pressure on the Fed to potentially keep on raising rates. So we may get one more 25 basis point rate hike from the Fed, but that's not fully priced in yet. So there is scope for those rate hike expectations to shift. And of course, there's going to be a whole bunch of other data coming out of the US as well, such as the Consumer Confidence Index, personal consumption and spending. So all of those will be watched to see how the US economy is faring.
I see. Let's cross into Europe now. Eurozone inflation for February is coming up as well, but we did have an upside surprise in the UK inflation a few days ago. Do you think the euro area could see a similar trend, and what would that mean for the single currency?
Well, if we have a look at the forecast, we should see another drop in Eurozone inflation in terms of the headline figure, but there is actually the core core inflation in the euro area is expected to tick up from 5.6 to 5.7, and just like in the US, the ECB is carefully watching underlying price pressures, and we've had much more stronger signals from ECB policymakers about additional tightening. The Fed has, a little bit more sort of on the borderline. They are more likely to pause than the ECB. From the ECB, we had a very clear a signal from Lagarde that they will, use interest rates to control inflation, and they will use other tools to maintain stability in the banking sector. So if underlying inflation, if you don't see progress there in the Eurozone, then the ECB will be inclined to tighten again. And especially now where the dollar is struggling, because of course the expectations of the Fed's terminal rate have come down so sharply. So even if the Fed does does raise rates a couple more times, even in that scenario, the projected terminal rate would not be anywhere near where it was prior to this crisis. So really, the outlook for the euro is looking a lot more positive against the against the dollar, and so we could see some moves if we see positive surprises in the incoming Eurozone data.
Rafi, thanks so much. This was the Weekly Outlook here at xm.com.